Hello everyone and welcome to another accounting lesson. Today we'll be learning more on capital expenditure and revenue expenditure. So let's get started on some of the quiz questions. Alright, question number 1. Capital expenditure affects the capital account. This is incorrect because the capital expenditure would have affected the non-current asset account instead. Alright, and since it affects the non-current asset account, capital expenditure will be presented in the non-current assets section of the statement of financial position. Next, revenue expenditure affects the income account. Okay, again, this is incorrect. In fact, the meaning of revenue expenditure is simply expenses. So, since we know it is an expense, it will be presented in the statement of financial performance. Alright, moving on to the next question. Which of the following expenditures is capitalized? That means it will be recorded in the statement of financial position as a non-current asset. Cost of the car is one of them. Repairs and maintenance of the car would normally be something recurring, so it is not correct. In Singapore context, the certificate of entitlement or COE is necessary for someone to drive the car on the road, so it is part of the cost of the non-current asset. Freight charges to transport the car from Italy to the country of usage definitely will be capitalized as well. Monthly fuel charges are recurring, so they are not. And insurance during transit from the country is also part of the cost of the non-current asset. Alright, next question. Stationery is expense rather than capitalized. Why is this so? We do not want to waste resources tracking stationeries of a business. No doubt some of the stationeries may be used for more than one accounting year. However, the accounting standards has allowed the business to put stationery as an expense because the monetary amount is relatively low compared to the profit and the size of the business. Therefore, according to the materiality theory, stationery can be expensed rather than recording it as a non-current asset. Next question. Which of the following is not a characteristic of capital expenditure? To put it another way, which of the following is not a characteristic of a non-current asset? So let's look at the options. First one, it is placed in the statement of financial position. That is a true statement. Next, it is a recurring cost. It is not correct. In fact, non-current assets are more of ad hoc costs. Third, it increases the value of the non-current asset permanently. That is a correct statement. And fourth, the amount of expenditure is material or significant, and that is also a correct statement. Next question. If revenue expenditure is recorded as capital expenditure, there will be some effect on the accounts as well as the elements involved. Let's rephrase this into if an expense is recorded as a non-current asset. Basically, the expense is not recorded. Instead, the expense would be understated or too low. And if the expense is understated, profit would be overstated. And if profit is overstated, the consequent effect will be equity will also be overstated. So these three items are linked together. Looking at the sentence in another way, if we have placed the expense as a non-current asset instead, then the non-current asset will be too much or overstated. Moving on to the next question, if capital expenditure is recorded as revenue expenditure, basically, to put it in another way, if a non-current asset is recorded as an expense, what can we say? The non-current asset is too little and the expense is too much. So when the expense is too much, we say that the expense is overstated, the profit will be understated, and if profit is understated, equity is also understated. Therefore, the correct answer to this question is expense is overstated. Next question. Select the options that describes capital expenditure or select the options that describe non-current assets. Let's look at option 1. It provides benefits that last for more than 1 year. That is a correct statement because non-current assets are generally used by the business to generate income over the course of the business. Next, it includes costs to repair and maintain in working condition. That is not a correct statement for capital expenditure or non-current assets. Third, it is presented in the statement of financial position instead, so it's not correct statement. Fourth, it consists of costs to operate or run. This is also not a correct statement. The next option, it consists of all costs to buy the non-current asset and also to bring the non-current asset to a ready-to-use condition. That exactly describes what capital expenditure is all about. Thank you for watching this video, and I'll see you in the next video.